Hello and welcome to another update video about Ethereum. So we had a 5-wave move up into the July highs. Nothing has changed here. We're looking at this wave 2 correction to the downside into support. The idea is that this yellow support area somewhere here should provide enough support for a third wave rally to start. The condition, and there's always a condition, the condition is that the 1713 level is holding. Elliott Wave provides us always with the bullish support regions, for example, that are required to hold for this scenario to keep this scenario alive. A break below that level will typically lead to invalidation. And that's 1713. So there's lots of space left. We have further support at 1830 and 1781 and the ascending trend line. Zooming into the detail, not much happened, but we can see that an A wave completed, a B wave completed in this wave 2, and the C wave is probably still running. In the C wave, we have a 5-wave move. So in this 5-wave move, we are looking here probably at an ending diagonal, which is always annoying because it's boring. And I made a shift here. I think I did change that wave 1, which did sit here before, to here, but it doesn't change anything really. So all we do here is we did a wave 1, did a wave 2. We're probably still in a third wave due to the choppy price action that we see here. Then there should be still a 4 and a 5. Now again, I always have to say it, and a lot of people don't listen, but it is, you have to understand that cryptos like to do WXY structures. So after the next low, the low could be in. We don't necessarily need that 4th wave and the 5th wave. I do always expect it because it is the most common pattern based on probabilities. I always have to go with probabilities, which means that ABC structures are typically the standard that you expect. The C wave is a 5-wave move, but you can never rule out that they form a WXY structure. And if we do a WXY, then this last wave 4 and 5 isn't going to happen because the WXY in the last wave down only has 3 waves instead of 5 as an ABC structure. So that is why I like to scale into these support areas. Of course, I manage cash and I manage my position sizing. So that means that I am absolutely okay with it should support break, and I also am okay with it if price turns a little bit too early because I started to scale in already, right? So it's all about risk management when scaling into these support areas. But yeah, you just need to understand that the move down is very, very slow, very choppy, very sloppy, and it can turn around at any time. It's just that it's not evident at this point that a turnaround has already occurred. The last rally, which happened here a few days ago due to the Fed interest rate decision, that was just purely corrective. All we did, we rallied into resistance. That was at 1888 and haven't broken it. So the idea is still that we are in this C wave of wave 3. Target for the C wave, how can we calculate that? Well, we can take the length of the A wave. We go to the high of the B wave, and we're looking for the 1-to-1 ratio at 1815, roughly. That would be the ideal target, but bear in mind we have a lot of support around 1820, 1830. And then we should still get the 4th wave and the 5th wave, and we are still holding below that descending trend line. All of that would suggest trend continuation. The only thing that is a bit, you could say, annoying and boring is that the move down seems to be in slow motion. Here, we're not really following through to the downside. And I think if we take out the next swing low, it can be accelerated. That is here at around micro support is at 1850. And I already explained it on Discord and Telegram earlier. It would be great to get that sell-off today, because then we could get away for weekend and wrap it all up early next week. And then we can maybe take off. But again, the condition is that the 1713 level is holding. I don't necessarily expect price to come down all the way to the 78.6 FIB level. I don't see any evidence for it. I think we are dealing with the area between 1828 and 1781. Maybe a brief touch of the ascending trend line as it did before, but I'm not sure. I mean, it can always come down that much. It can, of course, always invalidate the setup, but at the moment, I just don't have any evidence for that. So I'll keep you updated, of course. If things change, I will let you know, but so far I still see the yellow area as a potential jump off point and a setup for higher into the $2,500 region. Okay, that's my update about ETH. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.